This video segment is in regards to how we go about classifying our revenues and estimated revenues for our fund accounting as well as our government-wide financial statements. Keep in mind that expenditures are able to be made because of revenues. And many of these revenues are made possible due to laws of both the budgeting jurisdiction and even levels of jurisdiction higher than the specific governmental entity. I want to point out now that it is very important that you read this section within the text because there's a lot of details in there. Make sure that you read those. But let's go over just some highlights of the classification of these revenues and estimated revenues. As we've already seen, we will be breaking down things on a fund level basis first, and then we are going to break them down farther within each fund. All right. We're going to call this classification for revenues and estimated revenues sources. So in other words, where did the fund get the source of revenues? And there are 7 major revenue classes. All right. So these source classes are taxes, special assessments, licenses and permits, intergovernmental revenues, charges for services, fines and forfeits, and finally a miscellaneous revenue. Now granted, there can be more than these 7 major classes, and there may be some governments that actually need to have more than these 7. Again, we're trying to supply users of this information with adequate detail in order for them to do whatever it is they're doing, assessing fiscal responsibility, seeing how things were brought in and what things went out during a period. So let's talk for just a second about taxes, our first major source. Typically, taxes represents a massive percentage of the revenues of a government. Now keep in mind, taxes are mandatory contributions. They're compulsory. In other words, because there's a law for them, people have to pay them. All right, so recognition of taxes is under the modified accrual basis, and we'll talk in a later section about our journal entries that are required for putting in not only our budgetary information, but also the actual transactions that occur during the period. Also, something else to keep in mind, that these revenues definitely increase the fund balances. Special assessments, our second category. These special assessments are amounts that are levied against specific properties and the property owners. So we can think of special assessments as an amount that needs to be paid by a special group of properties. This amount is assessed to pay or cover all or part of the cost for a specific improvement. And this specific improvement or service, either one, benefits the special group of properties. All right, so if we happen to have a special assessment, many times these are tracked within the general fund if it's a typical government service or improvement. But if it happens to be a major capital improvement type, then we would track it in a capital project fund. And if by chance there's been any debt issued in order to get the project taken care of, then when we pay it back, we would track it and move it into a debt service fund during that debt service payoff time. Licenses and permits is pretty much self-explanatory. These revenue amounts are collected from individuals, organizations, for example, business entities, for rights or privileges. And there are literally all kinds of licenses and permits out there that governments collect for. A couple of examples, building permits, vehicle licenses, licenses for amusement purposes, business and occupational licenses, even animal licenses. Right, so there's a lot of different things out there that a government can have in the licenses and permits category. Intergovernmental revenues. These types of revenues are reflected when we receive grants and other financial assistance. These can either be government mandated or involuntary amounts received, or voluntary amounts received. Either way, these intergovernmental revenues represent non-exchange revenues. In other words, there wasn't a service or a product provided in order to receive these revenues. Non-exchange revenues only. What can be an example of a government-mandated involuntary one? What about the state having to share or pass down some of the sales tax revenues onto the local governments within the state? That's mandated. What's an example of a voluntary non-exchange? Well, sometimes local governments will apply for and compete for federal or state grants. Okay, so those are still non-exchange, but they are voluntary, excuse me. Charges for services. For services, not for licenses and permits, but specifically for services. These are for services and goods that are provided by a government fund to enterprise funds, to individuals, to organizations, even to other governments. Right, so charges for goods and services. Some examples, court costs go here, parking meters, library use fees, special police service, events, management, things like that. Charges for services provided by the government to others, including enterprise funds. Keep that in mind. Fines and forfeits. Fines and forfeits even includes library fines, where charges for services was basically only for, say, example, maybe an annual membership card to be able to go to the library. Fines are fines. Fines and forfeits includes not only fines and forfeits, but penalties. So when a person is assessed an amount for committing a statutory offense or for neglect of some official duty, it goes in this particular category. Forfeitures of money held for security against some type of loss or damage, or even collection of bonds goes here in fines and forfeits. Something to keep in mind regarding the penalties. Penalties of all sorts go in this category with one exception, and those are the penalties on delinquent taxes. And as we go forward, we're going to see how we're going to do these journal entries and reflect this information properly. So we may have revenues for taxes, and once the taxes on a property are deemed delinquent because they've been unpaid up to the due date and the day after they're late, then we will have a penalty on those and even interest on those. And we're going to make sure that it shows up in the correct place. I will be doing videos later in regards to recognition and how these items are to be treated. So for now, I'm just separating out the terminology from the actual journal entries and recognition notes. Miscellaneous revenues, our last one here on the list. It's going to have a little bit of everything in it. Now, granted, we don't always recommend using the word miscellaneous revenues, miscellaneous expense. It's too generic, it's not informative enough, and should be used sparingly. This category, though, is necessary because it does minimize the need for forcing some kinds of revenue into source classifications in which they do not belong. So we kind of have to have a catch-all just for that purpose. So keep that in mind. There's a little bit of everything that could show up within this miscellaneous revenues account, and we'll see some examples of that later. A couple of additional things for you to keep in mind. The general fund typically does have all 7 of these, and more classes are likely because many governments may need additional classes above and beyond these 7 sources. Again, we use these account source types for budgetary needs and also for our accounting needs. So you're going to see that we're going to have budget accounts and then we're going to have our regular accounts. In regards to special revenue funds, they should have only those revenues legally mandated in regards to the special revenues funds. Again, we know that those are restricted for the purposes of the special revenue fund. So why that special revenue fund was established. Again, budgetary and also for accounting. Debt service funds should have the revenues that are to be used for payments of the debt, the interest and the principal. Again, budgetary accounts and our regular accounting accounts. For debt service funds, special revenue, and general fund, we're going to see that. Capital project funds, again, for budgetary purposes and accounting purposes. They should have the revenues that are earmarked specifically for the construction or acquisition of the capital assets. We're going to budget for those and account for it. A couple of additional comments regarding taxes. Again, make sure you read the text. There is a portion there that talks to you about the calculations, 2 possible scenarios for how to come up with the amount of taxes necessary in order to fund a budget. There's mention of ad valorem taxes and property assessments and taxable property. Make sure you go through and read and understand what those terms mean. Interest and penalties on delinquent taxes is mentioned. Again, making sure that you know what the words mean. Penalties are legally mandated additions on top of a tax. Those are applicable the day it becomes delinquent or late, generally the day after the due date. And also keep in mind that taxes include such things as not only sales taxes and property taxes, but also income taxes and gross receipts tax. There are multiple kinds of property taxes out there. It's not just on real estate. They can actually have property taxes based on inventory, based on financial assets held, and other types of things. So depending on the jurisdiction that a person or company is within, there are a multitude of taxes and the way that governments can source their revenues. One last item. Keep in mind that we are only talking about revenues in this particular video. And if you go and you look at the government-wide statements and you look at the governmental fund statements, we specifically see revenue sections on there. Revenues are revenues. Interfund transfers and proceeds from issuance of debt are not revenues. These other financing sources belong specifically in the other financing sources sections. They do also increase the fund balance like revenues do, but they don't get classified as revenues. All right? Again, interfund transfers and proceeds from issuance of debt or debt proceeds are not revenues.